Most small business owners don't struggle because they lack effort. They struggle because they lack clarity. My name is Adam Diaz, and I've spent nearly 2 decades building, selling, and advising small businesses. This platform exists for one reason: to bring clarity to chaos and insight to confusion. Only what moves your business forward. Here, we talk real strategy, real numbers, and real leadership decisions that actually make your business profitable. If you care about margin and not just the hype, this podcast is for you. Welcome to Margin. Hi, Melinda. Welcome to the podcast. Thanks for coming on.
Thank you, Adam, for having me. This is great.
Really appreciate it. So tell me a little bit about your business.
I am the owner of Fayette Solutions. I'm a bookkeeper here locally in the Tri-Cities. I work with clients who are service-based companies using QuickBooks Online in the Tri-Cities.
Service-based companies. All right. And how long have you been a bookkeeper?
I've been a bookkeeper for about 20 years.
Oh, okay.
I've been in business for like 3.
Okay.
But just a lot of history
Yeah.
with bookkeeping. I started really young.
Okay. I like it. So this is a coaching session, and I want to answer questions as best I can to help your business grow and be more successful. So what is your big question for today?
My big question that's overarching in my business right now is pricing with morals.
Pricing with morals. Okay.
Feeling good handing a quote to someone that it's being true to myself, but also fair for the client.
Yeah, that's a great question. So tell me how your pricing works right now.
Right now, I am pricing the client a flat rate, but I am calculating it per hour in my head by what I'm estimating that it will cost. So I charge $75 an hour for a hourly rate. And so I, of course, multiply that by however many hours I think they're going to have based on transaction account, how many bank accounts, credit cards, etc. And then I give them that flat fee of a rate. And sometimes I think it's going to take 20 hours, but that just seems absurd. $20, 20 hours multiplied by $75 an hour is just so high. In my head, that's really high.
Okay.
And passing that on can sometimes make my gut clench, you know?
So you've used 2 words already that I want to unpack a little bit. So the first word was moral or immoral. You brought morality into this. And then the last word you just said a minute ago was absurd. So first, let's start with the word absurd. Why would you feel like $75 an hour times 20 hours? Let's do the math on that real quick. I don't have my phone with me. What's 20 times 75. So I guess 10 times 75 is 750.
Okay.
So it'd be 1,500, right?
Okay.
So $1,500. Why is that absurd?
I'm thinking about it as an employee. If they were to hire an employee.
Are you an employee?
No, I'm not an employee.
Okay. Why are you thinking about it as an employee then?
I'm bringing that mentality from, I was an employee for however many years.
Okay.
And bringing that to the table is still something that's in my head because they can technically hire an employee to take this place.
That is an option.
And they could hire someone for $30 an hour. So why are they going to pay someone else $75 or more?
So that's why it feels absurd. Okay. Let's talk about the morality. You brought morality into this. It might feel immoral to you to charge $75 an hour times 20 hours.
There are for certain clients, yes, who, they make $80,000 a year, have 2 employees, and their net income is a loss. And that's hard.
Yeah. So let's talk a minute about what it is you're doing as a business owner, because there's a huge mindset shift that you need to have going from employee to business owner. As an employee, your job is to do a task and get paid. And that's negotiated from the person that owns the business and you, the person doing the task. We call that in economics an arm's length transaction. The business agrees to pay something. The employee agrees to do it for the amount that they're paying. It's actually not so different from what you're doing now, which is selling something as a business owner. Here's the big difference, though. As a business owner, you're producing something. The transaction still happens at what's called arm's length, which means nobody's forcing anybody to do anything, right? This is why it does become a morality issue when we start talking about government, when we start talking about monopolies, when we start talking about use of force. But in a free market, everybody's free to hire you or not.
Right.
If somebody doesn't like the price, they don't need to hire you. So, and this is true of anything. That sweater you're wearing, you didn't need to buy it. You chose to buy it at some point. Now, I don't know how much that sweater cost. I'm going to assume it's $50. It was a $50 sweater. At some point, you went to the store and said, I've got $50. This sweater to you is worth at least $50 or more, because we will buy something that's worth more than what we pay for it, right? You might have came home and said, look at this sweater I bought. I would have paid $100 for this sweater. I'm so happy. $50 is a great deal. Right. So that's $50. But if it was only worth $20 to you though, you wouldn't pay $50.
Right.
And this is the whole idea of a free market and arm's length transaction. We only pay for things to the extent we're willing to pay for them. On the other side, we only sell things to the extent we're willing to sell them for, or to the production cost if we're in business. So fundamentally, how a business owner makes profit is they provide something of value that's more value to the person buying it than the cost of production to the person producing it. The difference between those two numbers is profit. So if you want your profit to go up, you have to either reduce the cost of production, or you have to increase the value that somebody is getting in the thing that they're paying for. And there's all sorts of ways to increase value, right? You can, because again, when you start bringing morality into it, even a sweatshirt costs different amounts of money depending on what brand you get, depending on what store you buy it from, right? But if it's an arm's length transaction, nobody's forcing anybody to buy anything else. So again, we think about a water bottle. If you buy this water bottle at Costco, it's only 25 cents or 50, not that expensive. If you buy this water bottle at the airport, it is more expensive. Now that you might be able to cross into the line of morality at an airport because it's a little bit monopolistic. It's a little bit exploitative, right? They don't have any other options. You're in an airport, you're tired, you have to drink something, right? So maybe that again is crossing into the line of morality. None of those things apply to you as a bookkeeper though. You as a bookkeeper are completely in an arm's length transaction. There's no exploitation. There's no manipulation. There's what is the value of the service I'm providing? And are they willing to pay for that value? If somebody's willing to pay for that value, then that means they value you enough to pay that price. Otherwise, they wouldn't do it. The same way you wouldn't have paid $100 for that sweatshirt. You only paid $50 because that's what it was worth to you. It's an arm's length transaction. So as bookkeepers or anybody that's in professional services, we need to constantly be increasing the value that we're offering and charge based on the value of the thing we're providing, not based on the cost or the hourly rate. As a bookkeeper, as a video editor, hey Marcos, as anybody that's providing a professional service, we need to be charging based on the value that we're providing. And then people have the freedom of the market to either choose to purchase our service or not. There's no morality and there's no absurdity. If people feel like $1,500 a month for clean books is what is worth to me, then they'll pay it for you. They'll pay for it. If it's not, then they won't. And of course, people are going to shop around, right? So they always have the option of hiring an employee and doing it in-house. They have the option of going to a fancier firm. They have the option of hiring a CPA to do their bookkeeping. They have all sorts of options before them. And every single one of those options is providing some sort of value proposition to them, except for the employee. That way they're setting the price, right? And the employee saying, oh, I'm willing to do it for this price. But in every situation, whenever you're selling a professional service, you're saying, I am willing to provide this value to you, and it's going to cost you this amount. And this is a big deal for accountants especially, and this change happened pretty significantly, probably 20, maybe even 30 years ago, where people tried to get away from the hourly billing and started to get to the value billing, right? It's like we don't want clients to be thinking about, oh, I'm paying for this service per hour. We want them to be thinking about what is the value of what I'm getting and what am I paying for it as a whole. Not, it took me 3 hours to do this tax return. Therefore, I'm paying them $300 an hour because it's $900. It's what is a completed, timely, accurate, aggressive tax return valued to me? $900, irregardless of how much time it took me to prepare, right? So all accountants for the last 30 years have been moving to that model of pricing, whether it's bookkeeping, tax, or whatever. And most professional services have as well, with the exception of a few professional services, but most are trying to move to this value-based pricing, right? Is saying what is the value, and then presenting it as long as I provide this value, you provide this price, it's arm's length transaction, everybody's happy because nobody's forcing anybody to be in business with you. So that's kind of how profit is made, right? What does it cost me to produce it? And what is somebody willing to pay for it? And as long as you're not manipulating somebody to buy something they don't want to buy, they're getting the value they want. Otherwise, they wouldn't be buying it from you, right? So it's not a matter of morality in my mind at all. It's not a matter of absurdity. It's a matter of what value can you provide for your clients.
Right. Yeah. It's, and I totally hear you. I guess the confrontation potentially of presenting this to ABC owner, and having to feel like I have to defend myself. And I know that I don't have to defend myself. I get that.
Right.
But just the other day, someone said, this should only take you 6 hours. I think this is way too high. And I feel like I didn't defend myself the way I needed to. And I just said I didn't have to defend myself.
So again, I would respond to that as I don't work by the hour. I work by the product. Mm-hmm. You just need to get used to saying those types of lines to people. Like, I don't charge by the hour. I charge by the product I provide, the service I provide.
So do you think I should get out of the habit of saying, like, I charge by the hour, but I give you a flat price?
Oh, yeah, I wouldn't say that.
So I wouldn't even include by the hour when I mention anything.
I wouldn't say that. Because, again, what you're trying to get away from is you're not selling your time. You're selling your expertise. Okay. And there's a lot that goes into this, especially in the bookkeeping industry. Because, again, I used to be a professional bookkeeper. And so I know how bookkeeping is. Bookkeeping is like a garden. The more you tend to it and the more you clean it up, the more beautiful the books become, and the easier they become to maintain.
Right. Oh, yeah.
So when you get a new bookkeeping client, if they've been doing their own bookkeeping or if they had a bad bookkeeper before, it's just like walking into an overgrown garden with a ton of weeds. And it's a ton of work to clean up. And what can happen is you can spend, you can clean it up, and then when you pass it off to the next bookkeeper, it's going to stay clean. It's going to take time for those weeds to come back. Even if they're a bad bookkeeper can take over a good bookkeeper's work, and it will stay good for like 6 to 8 to 12 months, but it'll slowly start deteriorating. So good bookkeepers are constantly on the trend of making books cleaner and more efficient and more useful. Bad bookkeepers are on the trend of the books are starting to get messier and messier and less useful. Okay. People don't understand this. This is how I would also talk to people about selling bookkeeping services is like, hey, you think bookkeeping is like building a deck. I get it and I put some time in and it's done. It's not. It's going to be something that's tended to over time, and the processes get cleaner and cleaner. So if they're really pushing me on time, I would say, hey, the first few months that I do this is probably going to take me 20 hours a month. But when I have this dialed, it's going to take me 2. Mm-hmm. And you're going to pay the same price either time, because I'm not charging you by the hour. I'm charging you so that you know that your books are clean and continuing to get cleaner as the longer I work with you, so that your information is accurate and timely, and you have the information you need to make the decisions you need to make when you need to make them. And you can say, hey, I know a lot of other bookkeepers. I know a lot of employees. This is a hard thing to do. I can do it. I can pull it off. I will have your books done timely. I will have them done correctly, and you will have the information you need to make the decisions you need to make them, that you need to make when you need to make them. If that's worth it to you, this is my fee. If you think you can get that same level of service somewhere else, or with hiring an employee that you have to manage and train, go for it. Like, that's no problem. Like, that's a tall order, and it's something that I think I can deliver. right? And when you phrase it that way, it's not a matter of them being, oh, that's too much. It's like, this is what I have to offer, and this is the price that I'm willing to offer it for.
Right.
And you're in a unique industry because, quite frankly, a lot of bookkeepers just can't do it. They can't do it timely. They can't do it cleanly, and they're not providing reporting that's actually useful. And so again, if you can start showing that, hey, since I've been with Melinda, things have gotten cleaner and cleaner and easier over time, it's going to be really hard for them to want to switch. And what may happen is eventually they might switch for a cheaper option, and they'll see things they won't come back to you immediately. That's what's kind of the sucky part is they're going to switch to somebody else, and they're going to have your beautiful garden of books, but it'll slowly start deteriorating, and things will get messier and messier and worse. And hopefully people will have the understanding that, oh, Melinda had built something, and now this person has let it go to rot, right? This is what you want to communicate when you're selling your services, is that I'm building something. I'm curating a garden for you, and it's going to be super helpful. It's going to be super beautiful. It's going to be super effective. But this is what it costs, and it's not by the hour and you can tell them straight up, like, I expect to probably lose money these first months, but as time goes on, I'm going to become more efficient because we're going to get to know each other better. And my pricing doesn't change because the value that you're getting is the same every month, no matter what. Does that make sense? And that starts training people to think about it differently. But more than that, it should be training you to think about it differently. You might end up having clients that you're making $300 an hour on, right? And that's not immoral. That's not absurd. It's because you've built something that provides value, and that value is there, regardless of how much time it takes you. That value is through your expertise. That value is through your training. That value is provided based on all those other things, not just the pure exchange of your time.
Mm-hmm. Yeah. No, I like how you put that. That's really helpful. I think part of my issue is the way I convey it.
Okay.
Potential clients can feel your tension, can feel your maybe unsure, how you feel unsure about yourself. And some people might be like, oh, that's a good kill right there. We could take advantage of the situation. And it's terrible to say someone would do that. But the more I come across like I'm unsure of myself, I feel like the more they're going to be unsure of what I have to offer.
Yeah.
And that's something that I myself have got to work on, that feeling confident in this price, that it does have the value that I'm going to bring to them.
Well, and again, I think part of this for you is a mentality shift.
Okay.
Because I'm not going to, this might be how you're thinking now. If you do something and it takes you 10 hours, but you deliver it 2 days late, you're going to want to charge $750 for that because it took you 10 hours. Mm-hmm. But it's 2 days late and they already had to make the decision. The value to them for that is zero, but it took you 10 hours. Mm-hmm. And you're thinking it's worth $750 to me. Versus I got it to you a day before you needed it and it took me 1 hour. And I was the only one that could do it because I was available that weekend. Do you think a business owner is willing to pay $750? They needed it. See the difference there? Is one is thinking about, well, I spent 10 hours on it, but I delivered the product late. You lose. The business owner loses. They're not going to want to pay you. And you didn't deliver $750 of value, even though it took you 10 hours at $75 an hour. So, but if you do something on time, then and it was clutch, and then it is worth it. It is worth it. So if you start thinking in these terms, the amount of time it takes you to do something is almost irrelevant. What you're actually giving them and when you're giving to them and how you're giving it to them, that's much more relevant, right? So again, you can say, it doesn't matter how much time I spend on this. Am I giving them what I promised I would give it? Mm-hmm. And this is professional services, right? Is people care a lot less about how much time it takes you and a lot more about, am I getting the thing I paid for?
Right.
Or am I getting the thing I agreed to, right? So bookkeepers that, like I said, are timely, get things done right, get things done accurately. Like that's what they're paying you for, your knowledge, your experience to do things that way, not for your time. And people that want to pay you by the time, they should probably just go hire an employee, right? And so it is tougher, and you got to be ready for rejection. That's just part of being a business owner as well. is that a lot of people are going to think you're too expensive.
Right.
And you just got to be okay with it.
Right. Yeah. That's something I feel like will forever be a work in progress of just being okay with hearing no. And what was your segment the other day? Like, you need to hear more no's than yeses.
Yes.
And I've been hearing a lot of yeses lately, and I know that's not great.
It's not great. It probably means you're underpriced.
Yeah.
So, and I would just remind you on $75 an hour, that's not a super high rate. Even, because you've got all of your technology, all of your tax software, your insurance, you've got, you don't have health insurance except for what you pay for, where an employee would oftentimes have that. So that $75 an hour gets eaten up really quickly.
It does.
By business expenses.
Yeah. Yeah. Being a sole entrepreneur. 30% right off the bat, I put aside into a savings account for...
Yeah, both sides of self-employment tax, right?
Yeah. So that right there is, it brings you down to, what, 50?
Yeah.
And then any, like you said, softwares. And then I hire someone to help me with some basic data entry. And for them, I do add money to my hourly rate. I shouldn't call it an hourly rate. I do add money to the bill if I have to use someone to help me with data entry to eat up that, so I don't eat up so much cost. But yeah, it does come down to almost a minimum wage very quickly.
Very quickly. Well, and the other thing that people don't realize, again, is you're not productive at $75 an hour, 40 hours a week. You've got BNI, you've got travel, you've got inefficiencies, you've got sales calls, right? You're lucky probably to bill 30 hours a week.
That'd be a very good week.
That'd be a very good week, right? So that $75 an hour doesn't translate
really good point, Adam.
It doesn't translate anywhere close to making, if you're $75 an hour as a wage at a job, that'd be translating to close to $150K a year. And again, part of it is clients just are sometimes, quite frankly, stupid. I'll say it. They think, $75 an hour, she must be making $150K a year. Not even close, right? Because you're not even billing 30 hours a week, and then all the expenses, right? And then the taxes and all the rest, right? So sometimes people just need to be educated on it, right. But you can't control what people think. You just can't.
No.
And there's always going to be people, and again, there's this mentality people have that, like, if I can do it myself, I'm not going to pay for it. I shouldn't have to pay that much for it. And a lot of people think, well, I was doing my own bookkeeping. Why should I hire you at this crazy rate? And again, it's like, then don't. It's a free country. It's a free market. Go ahead and do your own bookkeeping, right? That's going to keep you wildly stuck as a business owner if you're doing your own bookkeeping, unless we're a bookkeeper or love it or something or,
right.
Whatever. But most of the time, business owners shouldn't be doing their own bookkeeping, right? So that's just a bad business decision.
Most of the time, yes.
You can't control that for people.
Yeah, definitely.
Are you the kind of bookkeeper that gets things done timely?
I am, yeah.
Sticks to your deadlines?
Yes.
Are you the kind of bookkeeper that mostly asks questions once and doesn't nitpick back and forth for data that you don't have?
I try to.
Try to. We all do our best, right?
Yes. Sometimes the data is important.
Yeah. Well, so I think the worst one of bad habit bookkeepers can have is as soon as they need something, they blast off an email, and then 10 minutes later they need another thing. So I think bookkeepers
consolidated emails need to happen.
Here's one email that has a list of 10 things that I need from you.
Right.
Not I'm emailing you every other day because I forgot to look at this and I forgot I need this and right. Then it feels like
that's really frustrating. It's okay if you miss something, but yes, consolidated emails are helpful. So yeah.
The other thing I'm assuming, just because you've been doing bookkeeping so long, you're pretty fast.
Mm-hmm.
I'm not even I don't do a lot of bookkeeping right now, but I square me up against most bookkeepers, and I'm very fast because I know what needs to be done and where things go.
Right.
Right. That's worth something too. So it's just the biggest thing you can do is just get away from tracking your time. So I'm careful what I say here because you should be tracking your time and you should know your hourly rate.
Yes.
But you should not feel bad if that hourly rate creeps up and up and up. It should be creeping up and up and up over time.
Yeah.
Right? If
I
you
think
look
clients expect it to be raising even if they don't want it to. Everything else is raising. So
well, you should be getting more efficient. That's the bigger thing is if you're on a fixed fee, You should be, every client that you take should be getting more and more clean, and then therefore more and more efficient. And your processes should be getting better and better, right? Where a client, the first month that you take a client on, it's unknown. You're getting familiar with the books. There's extra information. There's cleanup that needs to be done. The first 2 or 3 months are very inefficient. But as it goes on, it should be becoming quite a bit more efficient, and that hourly rate should skyrocket. And again, most business owners have bad experience with bookkeepers, or had it, an employee doing it, and they ended up letting that employee go. So now they're going to try and take it outside. They should see and feel a market difference with you taking over. And once they feel that, then they have no problem paying the value, right? A lot of times a bookkeeper, even full time, might make, I don't know, maybe $3,000 a month or $4,000 a month. And that was a bookkeeper in-house, right? You could charge that same amount, do it a fraction of the time, and give the owner way less headache. That's $3,000 or $4,000 a month, right? So you can see how, if you can drop, okay, I was paying my in-house bookkeeper $4,000 a month. Melinda will do it for $2,500 a month. And she gets me things more timely. She needs less oversight. I don't need a space in my office for this person. She responds to emails when I email her. It's like way better value and way less cost. They're going to pay that forever and never question it.
There's no vacation or sick pay or bonuses. Yeah.
So focus on the value that you're providing, and make sure the value is there, and that value will justify super high prices that you might consider absurd. But again, they're only absurd because you're comparing it to an hourly rate, which just doesn't make sense for this industry.
Yeah, I know it's not, the hourly rate mentality has not been good. It's just been, I've been asked that question a lot, like, how do you charge? Do you charge per hour? What's your hourly rate? And it's kind of been a bad habit that I've gotten into with even answering the question.
Well, let's practice. What's your hourly rate?
I provide value pricing.
I don't have an hourly rate. Yeah, I'm fixed price.
Yeah, figuring that out is a challenge too. Figuring out how many hours that's going to take, and asking for the client's books and feeling intrusive, but it's just a mentality shift, like you've said. That's the shift that has to happen. Yeah,
100% a mentality shift. It can feel intrusive, but this is a financial business, right? You're going to see their books. People used to think, because I used to do a lot of tax returns and a lot of bookkeeping. And at some point, you just kind of, numbers are numbers, and it's become so unemotional. You don't remember what people make. It becomes a lot more factual and a lot more objective, right? I would assume same thing like with medical professionals, right? Is like, it feels so invasive and personal, but eventually it's just like, I'm a doctor. I'm a professional. Is a body. Yeah. Right. And as financial professionals, we certainly are that way as well, but people have to adjust to that. Right.
Right.
I think, one thing I wish I had done better when I was in business doing this is that I just wish I would have been more comfortable with the no. I know the feeling. I totally know the feeling, and it feels bad when people think you're overpriced. But the problem is, even if you're, so in my opinion, $75 an hour is absurd. It's absurdly low.
Got it.
Okay. So, but the problem is, I think there's some people that still think that's absurdly high.
Okay.
Right. So all of a sudden now you've got a spectrum here of people that think it's absurdly low and people that think it's absurdly high. The people that think it's absurdly high are also going to be the most high maintenance people. Somehow that's how it always works.
So true.
It's how it always works. They always want the extra. They always want the scope creep. They're the hardest to satisfy, right? The people that understand the value you're providing are the people that actually respect the price because they're looking at the value.
Right.
So you got to weed through a lot of the no's to find the people that are the yeses.
Mm-hmm. Right. Yeah. Speaking with more potential clients, giving more quotes. Yeah.
And just being confident in yourself, confident in your services. I don't bill by the hour. I am fixed rate. I'll look at your situation and I'll tell you how much it costs. And then when you're giving the sales pitch, it's a question of what is it worth to you for this to be done accurately and timely every time, every month.
Right.
Is that worth something to you? And most people it is.
Yeah.
So,
Okay.
what else?
Something else that is has been a challenge is growing and respecting my time. Well, because I have a family, and the goal of this business was, of course, to provide, but also to make sure that I was able to be home and when my kids were not out of the house, not having to work nights, not having to work weekends. And as my business has grown, I've noticed that I've got to get downstairs and I got to do a couple hours of work, and I've got to start hiring more and trusting people to take this on for me, finding the right people, and growing this business is just such a scary thought. It's an exciting thought, but it's also a scary thought. Giving away part of something that you've built is something that, like I said, I'm excited for it, but I haven't acted out on it because I think I'm just afraid. I'm afraid of people being fraudulent, mistaking you, not taking you seriously, just unethical people who you could potentially bring on.
You're afraid of the hiring bad people?
Yeah, or hiring someone who you think is great, and maybe they are, but then they quit a month and a half later after you've spent 30 hours training them.
Yeah.
You got to start over. And growing the business in a way that can help my finances grow personally.
So that also brings back to my point of the $75 an hour just isn't as much as you think. So let's use a different analogy, renting, like a rental property.
Okay.
Most of the time when you're thinking about your rent or the profitability of a rental property, you have to account for the fact that sometimes it will be unrented, right? They call that a vacancy rate or vacancy allowance.
Okay.
And so you just assume, it's not fair if like you're running a capitalization rate and figuring out how profitable property is to assume that it's always going to be rented, right? It's just a bad assumption because reality sets in, it's going to not always be rented. There's going to be turnover. Same thing with this. When you're hiring an employee, there's going to be training hours. Sometimes the employee doesn't work out. Sometimes bad things happen that were unexpected. If your margins are so thin on that employee that you have no quote unquote vacancy rate,
Okay.
then you've just shot yourself in the foot and you're basically assuming best case scenario when best case scenario is usually not reality. So again, watch that $75 an hour and what you pay them, because again, you may say, well, I'll pay this person X, it's $25 an hour, and then plus my costs and this, and I got to make some for myself, but you don't include any of those other things. All of a sudden, that sum for myself ends up going to the fact that you did have to train them for 30 hours. They only worked for a month and a half and they didn't work out. Is that a possible, realistic scenario?
It's very possible.
Yeah, there's a probability that that'll happen. Now, hopefully it doesn't, right? You're not trying to have that situation happen, but there might be a 10% chance that happens. So there's a 10% chance that happens. Just if you're going to do the math, you would want to build in 10% of the times that I do this is going to happen. So my price is up 10% just for that one thing, right?
Right.
Because you're going to bill them out at some rate as well, or at least have that calculation in your head. You still want a value bill with your employees. However, you're also, as a business owner, going to be tracking the cost, right? So you want to know what hourly production rate they're worth. But you need to, don't make your margins so thin on your employees that, because this is what I've seen a lot of small business owners do, is they hire employees, but basically the cost of the employee is the full revenue that employee earns them, because they're unrealistic about employee costs.
Okay.
So, I don't want to say $75 an hour, but you could easily get to $75 an hour with an employee cost, right? Because you've got the taxes, you might have some benefits, you've got their non-productive time, right? So even just saying, okay, every time they work 4 hours, they only bill 3, and one of them is administrative or non-billable time, right? I've got to have their equipment. I've got to replace their computer every 2 years. I've got, all these different things add up, and pretty soon that employee is costing you like $62 an hour, and your revenue from them is $75 an hour. And just the amount of time it takes you to monitor them, like it doesn't pencil because the rate is just too low.
Right.
And so what ends up happening is now you're doing all this extra work and you're really not making any more money because the employee costs you about as much as it costs, about as much revenue as their Briggy did, right?
Right.
So your top line goes up, your bottom line stays the same.
Right.
And so the first thing you really got to do is figure out how much an employee truly costs you.
Right.
And just do that in Excel with every line and think of everything. And then especially include that non-productive time.
Okay.
So there's going to be a percentage. If it's 25% of their time is non-productive, you multiply the rate by 1.33. It's the same between, were you in my class the other day when we did margin versus markup?
It was not.
Okay. So you just think about it this way. Mathematically, all I'm trying to say is if they're only productive 25% of the time, that's actually a 33% increase. So if you think about 100, they work for 100 hours and they're only productive for 75.
Mm-hmm.
That's 25 hours out of 100 they're non-productive, right?
Okay.
That's 25%.
Yeah.
But 25 divided into the 75 is 1/3, 33%.
Okay.
So if you wanted to take their hourly rate and say they're only productive 25% of the time, you'd multiply it by 1.33.
Okay.
That's a mistake people make as well when they're calculating their ineffective time, because it's higher when you're comparing it to their productive time. Does that make sense? That was a lot of math for 30 seconds.
It does. I'm glad this is recorded.
Yeah. So if their hourly rate, you can go back and listen to the recording to make sure that makes sense. But make sure you're calculating that appropriately, their non-billable time.
That's good.
Yeah. And then just how much non-billable time you allow them to have is important too. And what, how many hours you're guaranteeing them, or if you're guaranteeing them hours, things like that. But really figuring out what an employee costs is step one, and then figuring out your billable rate from there. And again, you got to charge the rate that makes sense for this business to be profitable. Mm-hmm. This is not a charity. And if it's not profitable, then why are we doing it? Right? If that means only 2 clients out of 10 accept your services, so be it.
Yeah.
Just talk to more clients, talk to more potential clients. And that's where it comes in with small business owners. Those like, it's sales. I don't like sales. Small business probably isn't for you then, because like every small business owner has to be in some sales, which means you're going to have to face some rejection.
Right.
Or you hire that part out, right? Eventually, maybe.
Eventually, yeah, that might be down the road.
Really, for you though, you are the thing. You're the thing you're selling. So
right.
Your expertise, your knowledge.
Right. They're buying.
They're buying your commitment to good service.
Right. Yeah.
So yeah, when it comes to hiring employees, tracking profitability is huge. Don't just hire for the sake of hiring and then not be more profitable. You should be making money off of it.
Right.
A rule of thumb I always heard is kind of a third, especially in the accounting industry. You want to pay them a third of what they're billing out. A third covers overhead, and a third should be your profit.
Okay.
So if you're billing them out consistently at $75 an hour, all things considered, all in, you can't be paying them more than $25 an hour, including all their associated costs with them. So
that'd be pretty low hourly rate for them.
That'd be pretty low. That's where I say, yeah, 75 might be absurd. Absurdly low. Right? And again, people might be hearing this and be like, okay, I should hire, like what I'm hearing from this podcast is I should be hiring my own internal bookkeeper. Maybe, but most of the time not. I can still vouch for people like you, people like my old business. We just do it faster and better and more timely. We just do than having an employee in. And it's not always the case. I don't know your employees, who you're working with, but external bookkeeping firms can save you a lot of money because it's cheaper than hiring that full-time bookkeeper, and they just focus on the deliverables, not the time, right? And that's why the bookkeeping service ends up being cheaper is because the bookkeeper understands this is what I need to deliver and this is when I need to deliver it. And as long as I get those things done, then my client is getting the value that they are paying for.
Mm-hmm.
Does that make sense?
Yeah,
Yeah.
it does. Yeah, there's a lot of costs that go along with employee, and they're not just financial, that I think are very difficult for the bottom line for the employer.
Yeah.
And someone like me can definitely add value to them by not only my services, but the time that they save not maintaining that employee.
Oh, yeah. Yep.
If you can, yeah.
And there's just an efficiency differential too. When you bring an employee on, even if it's like a bookkeeper that's an employee that's only working 20 hours a week, they're always going to fill that 20 hours a week. They're not going to become more efficient and then say, hey, by the way, I'm only going to work 8 hours this week because I've built these better systems. They're just going to sit at that desk for 20 hours and kind of pick away at the bookkeeping tasks, right?
Maybe scroll Facebook.
A bill's going to come in and they're going to pay it, which is fine, versus like, okay, send me all your bills at the end of the week, right? There's just a totally different mentality with bookkeepers that are kind of external versus bookkeepers that are in-house.
Mm-hmm.
And again, at some point, certain businesses become big enough, you might justify an in-house bookkeeper or an in-house accounts payable person or different things, right? But most small businesses are going to save money paying fixed fee external bookkeepers, and if they're good at what they do, then the books will just get cleaner and cleaner. The bookkeeper will make more money, and the business will just continue to maintain that value that they're getting from the bookkeeper.
Right. Yeah. Good. I think another question, it's all going to come back to price, but is the time that it's taking me to do these tasks. And I guess I'm just trying to say that the time that it takes me to do these tasks every month is really eating into my family time. And I realize that, that's...
Which tasks? Bookkeeping tasks or something business related that's not billable?
Finding the time to work on my business and not work in my business is...
Action.
It's been hard. I haven't figured out how to do that because the billable hours right there that we've been talking about is king in my mind right now. But I know that I need to be looking at step outside of the bubble, and I need to look in and work on it that way. And when I think, well, I could be working on this client, or I could go upstairs and be with my family instead. Figuring that out. How do I think the solution is I need to raise my I need to raise my rate, become a value pricing, and hire out so that I can then work on my business. And that's just so many changes that need to be made to alter the way that I work.
Yes. Here's my first thought that I think people need to think about when they're making this transition. Right now, you're really self-employed.
Mm-hmm.
You're not a business owner.
Okay.
And that's a mental shift that you're going to have to make as well. And the shift is very difficult. Self-employed means I'm the one producing most of the value that's being given to the world, that's being put into the market. I'm the one producing it. I'm self-employed. Versus a business owner says, I've got systems and things that are producing the value, whether I'm here or not, right? So if you were to sell your business right now, you'd be selling a self-employed role to somebody else who wants to be self-employed, right? You wouldn't be able to take it, put it in a package and say, here, there's a bookkeeping firm. This is how much money it makes every year, so you pay me this, right? It's like, hey, here's a job. You can go do the job and make a similar amount of money is what I was making. See what I'm saying?
I do.
So there's nothing wrong with being self-employed. Nothing wrong at all with it. But what you can't do is mix the two up in your head and thinking, okay, I'm going from, so part of the reason this whole thing is overwhelming is right now you're self-employed and now it feels like you're starting a business. So now you've got two things, right? And that may be the right direction for you, but then you can't you can't be confused in thinking that they're the same thing. The starting the business side of it is a whole new lift. And whenever you do start a business, there takes some time to get that ramped up. That lacks profitability sometimes at the beginning, and it's a new set of tasks and challenges, right? And any business that you're going to start is going to take some work just to get it off the ground. And so that's probably why it feels overwhelming, is like I'm self-employed, and now also I feel all this pressure to do the business side of it. And they're almost two different things completely.
Okay.
So I think there's ways to scale into it. And I use that word scale very specifically, meaning build systems to go from being self-employed to being a business owner, right? So what systems do you have in place that you can use to make it less of a self-employed gig and more of a business gig? And the systems need to be airtight. And then you just start transferring things over slowly. So if you are a really good, really competent bookkeeper, but you don't have any systems in place, then the people behind you might suck, right? If you're just self-employed, you don't necessarily need all those systems because you're just a good bookkeeper. You get things done. You get things done right. You get things done on time. But the person behind you may not have the same skill set you have. And so they need the systems in place to be able to produce work content at the same quality that you produce it at. So in part of making that transition is especially a highly competent self-employed person needs to build out checklists, systems, expectations, standard operating procedures, just write things down so that when somebody comes in behind, you know that they're going to do it the same way that it needs to be done to be able to deliver the same value of the product that you had delivered before. Because otherwise the whole thing will crumble under you anyway. Because you'll just be like every other bookkeeping firm where people can't deliver the product timely, and then you won't be able to demand those higher rates that we've been talking about, right? So it's really important. The very first thing you do is systematize what you do and how you do it, so that when anybody else comes onto the team, they're just stepping into your procedures that are already successful. Does that make sense?
Yeah, no, it does.
It's probably beneficial for you to start with somebody that's already fairly competent, not training from the ground up, although that can be nice as well. But with your time restrictions, I would probably try and start with somebody that's
Established bookkeeper.
fairly established. So you're not spending a lot of time training. You're more spending time on quality control.
Okay.
Almost no training, because training takes time. But quality control you should be doing anyway. And again, a lot of the quality control is just, are you doing this right and on time? I mean, that's really all it is for bookkeeping. Is it right? And is it on time? Is it useful? Right? Because it can be right and on time and not useful either. So those are the three things: right, on time, and useful. And so as long as you're making sure, checking those three boxes with the people you're hiring, and then you pay them maybe as contractors to start, that you're just kind of shifting some work to, there's very little supervision, there's very little training, and you continue building out the systems and the models, figure out your pricing, and then you can slowly start moving yourself away from being the one to do the work to having other people do the work.
Right.
But the other thing is, like, if you just start hiring employees, because a lot of the money you earn right now is because you're doing the work.
Yeah, definitely.
So like even if we had a pricing issue a little bit fixed, like let's say you raised all your prices by 25 or 50%, and then you hired people to come in and do all that work, you would make significantly less money because you're not doing the work anymore, right? So your volume has to go up because you're only making the money on the difference between what it's costing you to pay the person and the amount of work versus before where you were actually the one doing the work. Does that make sense?
No, it makes a lot of sense.
So your volume needs to go up pretty significantly. And in the meantime, you have to do some of the work. So you're making the money. And then you need to shift some of the work to the new people, but you're making less money on that work as you get new work, right? So it can be a tough cycle to do, but it's got to be kind of incrementally in a transition. I see people sometimes do it way too fast, where they hire somebody and give away too much of their work when they were a self-employed person. And then they don't realize why they're not making any money anymore. It's because, well, this other person's now earning the money that you were earning as a self-employed person.
Right. yeah, it's balance act, and yeah, I can't not afford to pay someone, and it'd be terrible to bring someone on and then not have the work for them anymore, and or not be able to pay them anymore. That would not be good. Yeah. Okay. That's most of my questions.
That's most of your questions?
I
Good.
hope that's not too little.
So those were some great questions. And if people are interested in learning more about your business or where to find you, what's the best way for them to learn about you? And
yeah. So I have a website. It's fayettesolutions.com. And you can email me at melinda@fayettesolutions.com.
great. I think you've got a great business. I think you're doing a great job. You just got to be confident in yourself, confident in your pricing, and just push out that value, right? You're not forcing anybody to do anything. If they don't want to work with you, they don't have to.
Right.
Right? So you provide good value to the world. Just keep doing that and trust the system, and you'll be fine.
Right. Okay. I really appreciate it, Adam.
Yeah,
great.
you're welcome. Thanks for coming on.
All right. Very good. Thank you.
Thanks for checking out this podcast. I really appreciate it. If you enjoyed this content, please like, comment, subscribe. It really helps us out as content creators. I'm Adam Diaz, and I have nearly 20 years experience building, selling, and advising small businesses. Welcome to this channel. I'm going to be doing videos and content on everything business strategy, business finance, and business leadership. This isn't pie in the sky theory. This is real life. How do I make my business run successfully? A lot of us go into business because we're passionate about something. I'm passionate about making businesses work. You've come to the right place, and you're going to get a lot of content on this channel about how to grow your business and make it more successful.